Hello everyone, and thanks for tuning in for another Market Outlook by Exness. My name is Andreas Semistocleous, trading specialist here at Exness, and in today's video we are going to be checking on a possible trading idea for the next few days, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. Last week, the idea was on silver with targets the 23.80 and the 23 if it moved to the downside. The higher target was achieved and is currently trading around the 24.30 area, validating the target of last week. Now, for this week, we are looking at gold for a potential long trade with a target around the 1,930 after some possible correction around the 1,905 area. The price corrected from the low of 1,885 last week, and the recent minor correction might continue in the near short term. The level of 1,930 is made up of the 50% of the daily Fibonacci retracement, the downward trend line, as well as the 50-day simple moving average. On the other hand, the stochastic oscillator is near the extreme overbought level, while the 50-day moving average is trading below the slower 100-day moving average, possibly indicating that a move to the downside might be seen on the daily chart. In case that happens, we might see the first area of possible support laying around the 1,905 price area, which consists of the 23.6% of the daily Fibonacci retracement. The major factor that is affecting this trade is the temporary slowdown of the dollar index, the DXY, while the American 30-year bond yields have declined to 4.28%, showing that capital is flowing in favor of the dollar has slowed down, boosting the pairs traded against it. Also, if we take a look at the commitment of traders chart, we will see that the positions of commercial traders is ticking up, further supporting the buying narrative. In terms of economic data for this week, we have the US core PCE, the personal income and personal spending, all set to be released on Thursday the 31st at 12:30 p.m. GMT. And on Friday, we have the American job report, where the market is expecting the NFP figure to decline and the unemployment rate to remain stable at 3.5%. On Friday, we also have the US manufacturing PMI, where the figure is expected to rise slightly but still remaining under the 50-point mark, meaning that the manufacturing sector in the States is not expanding and could potentially create losses on the greenback. So in summary, the trading idea for this week is a long position on gold with potential target around the 1,930 after a possible minor retracement around the 1,905 area. The main narrative is the slowdown on the US 30-year Treasury bond yields, as well as the increase on the positions of commercial traders based on commitment of traders chart. The economic data that could affect this trade are mainly the PCE, the US job report, and the manufacturing PMI. Remember, this is not a signal, it's just an idea for a trade, it's not a guarantee of success. Always do your own research and remember to manage risks.